Hello and welcome everyone. Thanks a lot for joining us on our 6 month update, right? So Wright PMS, as you're aware, started very recently, and uh, and we onboarded our first client on 18th of August, and now we have turned 6 month old, and it's a big milestone. So that we've been talking to so many people, and we've had a very exciting journey, right?
Yes, absolutely. It's been very interesting. In the past 6 months, we've connected with so many different types of investors who have, really showed a lot of faith in us. It's been an exciting journey. Yeah,
Yes. And we've done well in terms of client capital. Obviously, volatility is part of the market, and which is something that we've
right.
seen recently. But I think the strategies have done extremely well. We've ranked on the top quartile on PMS Bazaar on all of these months. We were two of our strategies were in the top 10 in the last month. And let us now take you quickly through a quick presentation, which will showcase what we've been doing on the PMS. And uh, so let me try to share my screen. All right, perfect. Like I said, we've turned 6 months old, and 6 months is a big milestone, right? Because when you are creating these investment strategies, a lot of people want to look at your previous track record, right? They want to see how much have you performed, and 6 months is one key milestone that some people would be happy to invest only after you have been in the market for 6 months. So it's a great milestone. We have completed 6 months. We are touching 100 crores in AUM. We have not exactly touched it yet, but when we do, we will inform people. And that's also a big key milestone that we have been looking up to, right? And 6 months ago, Siddharth would tell you that we were scared on how this will go. We started it. I did not have a visibility on that we would be able to get 100 crore worth of AUM in 6 months. I thought there are various PMSs, and some of them do well, some of them don't, and I didn't know what would happen to us, right? But it's really really encouraging for us that we've been able to cross 100 crore, I mean touch 100 crores. And kudos to all the 130 investors who have more than 130 investors who have come in right now. um, Talking about investors, we've got some amazing people who invest with us, and which is a big motivation. So we love talking to all the investors that we have people from so amazing backgrounds, people in the leadership roles in the corporate world, people who are mature, who are uh, who have built their wealth, working in different domains, and are now taking a call of investing into the PMS. We've got a few young people as well from diverse backgrounds who are investing with us. So amazing set of people really interested into the market, really interested into what we are doing. And it's a great thing that we get to talk to all of them, right? Now, having given a little bit of background about our 6 month journey, let's look at our funds, right? So as everybody is aware that we saw volatility in the month of February, right? uh, Month of February, last 8-10 days have been volatile. There has been a sharp day of correction on the PSU segment, right? And I remember that I last week created a video on the PSU segment, right? And just after that, the PSU stocks crashed. So, PSU segment is something very interesting. All of these moment strategies that have momentum, various other research houses, they do have exposure to PSU. They are re-rating it upwards. So it's been an interesting thing. And what we will do is, I think one concern that investors in the right PMS could have is about the PSU exposure. So we're going to address that part in the in the next section in the presentation. In the meantime, let's have a look at the performance, right? You would see that the 6 months performance of Factor Fund is touching for the 54%. It's been robust even in the PSU correction, right factor fund hedge has been very strong in the PSU correction, did not fall a lot. So I think it's very highly risk managed. And then alpha, as you're aware, we keep on saying it's a high risk, high return strategy. So it did correct a little bit, but it's recovering well, right? Let's look at the performance of the factor fund, right? And you would, if you give me a second, you would see that even despite the recent correction, this particular strategy is on a upward path. February also, despite all the volatility, the strategy is touching close to 5% in performance, and it is at a top. It is not going through a drawdown right now. Uh, and allocation, hasn't. There has been some shifts recently, and there might be more shifts coming in. But if you look at this strategy, you would see that we do have allocation into a few infrastructure link segment, a few PSU stocks, and we are going to justify that in the coming slides. But it's a dynamic allocation. So if, let's say, coming tomorrow, pharma starts to do better or IT starts to do better, you would see your allocation shifting towards those segments as well, right? But right now the current allocation does have power financing, energy, and a few banking and financial market companies, right? Let's look at alpha. So our best performing fund alpha has had a correction in the February month, right? Alpha 10 stocks, and some of these stocks went through sharper drawdowns, and we've seen a little bit of correction. The strategy is recovering from it. What we have seen typically is that whenever there are sharp corrections, there is sharp recovery that comes out of the strategy as well. So we're just waiting for that, and I think it should pick up. But like we've been saying continuously, it's a high risk, high return strategy by construction. So in times of slightly higher risk, you would see greater impact here, right? Here also you would see very diverse allocation with some tilt towards the infrastructure segment. Now let's look at the factor hedged. Like I said, the factor hedged had a most insignificant correction when the when the PSU stocks went down last week, and it has recovered. It is going flattish right now. It is not negative, but it is flattish. And I think some people have concern about factor hedge sort of lagging behind the other two strategies. But if you have a look at the recent performances, you would see that January, February, the strategy has stood up for itself. January, it had more than 12%. It is a top quartile performance if you compare it across PMSs as well, right? Here also, highly diverse allocation with some allocation to engineering, IT, and electrical equipment. So that was broadly about our allocations and broadly how the strategies have been doing. It's been a very interesting time, and the outlook definitely remains very positive. Now, what we are going to cover in this particular presentation is, the justification for allocation to the PSU segment, and how should we be looking at the PSU stocks right now. Along with it, I'll maybe take you guys through a recent research article that we did on the optimal rebalancing frequency of the momentum strategy, right? So I think we get a lot of questions about it. So we'll take you guys through that as well, right? Now, talking about PSU stocks, why should you invest in PSU stocks, and why are people now allocating to our PSU stocks when others, when fund managers historically have been a little bit wary about PSU stocks. They think it is volatile, and but recently what we have been seeing is that PSU stocks are getting re-rated. What that means is that analysts across India are re-rating PSU stocks to give them better, price targets, right? And so we have to understand this whole story, why this is happening, right? So the first thing that's been happening is that there are a number of microeconomic reforms that have come into India, right? So the GST, the real estate RERA regulations, the PLI schemes like these have added incremental things that have now made PSU stocks a very good story, right? So these regulations have come and streamlined business processes. The regulatory burdens have gone down, and there has been a conducive environment for PSU operations, right? GST has unified the tax segment. RERA has brought transparency and accountability to the real estate segment, and PLI schemes are incentivizing manufacturing activities. So, a number of reforms are incrementally adding to the worth of the PSUs, and then the government of India has allocated a lot of money to the infrastructure segment, to the PSU segment, and that is also, adding value to the PSU story. Now, apart from those regulations, there have been operational efficiency which has been added incrementally to PSUs, right? PSUs have improved their efficiency, corporate governance practices. There have been cost optimization and efforts on digital transformation, talent development, and there is much more clarity that now analysts see in terms of investment returns, right? So if you allocate to PSUs, there was no clarity on what is the return that you're going to get, but now with all these clarifications and the regulation clarity, you are seeing clearer return on capital, and the increased transparency and accountability is boosting investor confidence, right? There is also PSUs also have a benefit from another story, which is the geopolitical factors and supply side adjustments, right? So the China plus one after COVID, when corporations started moving out of China, the investment came into India, and Indian PSUs benefited a lot from it. Secondly, whenever there are geopolitical concerns and trade disputes among global companies, people are start looking for alternative supply destinations, and Indian PSUs end up gaining because of that. Specifically, if you have a look at the oil and gas companies, somewhere in agriculture, etc., right? And PSUs have really adapted to these trends by ramping up their production, improving production quality, and leveraging these shifts, right? And there have been strategic alliances that have been formed. There are a number of deal wins that are happening in this segment, which is making it quite attractive and which is leading people to actually upgrade these stocks, right? So, having started talking about the PSU segment, let me now quickly talk to you about PSU banks. So, talking about PSU banks, um, obviously the PSU bank segment saw a good correction last week, right? And it has been diverse. It's not been like every PSU bank corrected, but yes, I think if you look at some of the smaller banks like the Indian Overseas Bank, Union Bank, Indian Bank, Central Bank, these guys corrected a lot in the last week, whereas still PNB, Bank of India, Bank of Baroda, SBI, Canara Bank, they have had a positive time, right? So uh, there is still interest in the PSU segment, and why is our PSU bank still exciting? Let us have a look at it, right? So the loan growth across PSU banks has been very robust. SBI is giving a very good ROE, and large PSUs also have a very good forecast, right? And the forecasts say that the return on equity will continue to be robust going forward, and which makes these companies very attractive. Along with it, the NPA quality or asset quality has been improving. PSUs are seeing, that gross NPAs are high, but net NPAs have gone down, and provisions are covering everything. And people expect that even though there is a little bit inflated valuation, PSUs could justify it. So PSUs definitely are above their historical valuations. But if you compare it to the private sector banks, you would see that private sector banks uh, PSUs are now matching closely with the private sector banks in terms of their loan growth, EPS, AGR, etc. And while there is a valuation premium on PSUs from their historical averages, if you compare it to private banks, you see that they still have a lot of scope to grow, right? So with these improvements, I think PSU's banks still do have a scope for growth. Definitely, PSU banks lead in the infrastructure spending, in the corporate project loans, and they could outpace private bankers in that space. And what is very critical is that their management quality, transparency, and efficiency keep on improving, like it has shown a trend, right? Now let's talk about energy PSUs. I think that has been a big interest, interesting thing that people have been watching about. There is oil marketing companies like BPCL, HPCL. They have rallied almost 30%, and analysts continue to be bullish on these stocks as well. Uh, and while even after this 30% rally, people are definitely positive about this segment. There have been a few regulatory impact, right? Like the transparent windfall taxes and marketing margins. These different regulatory influences have given a boost to the energy PSUs. Government is looking at the PSUs as wealth generation opportunity, and they are looking to invest into the green energy and the green hydrogen project, which is also boosting the energy PSUs. And that continue to be a very strong and a good investment opportunity uh, right now. Let's now look at what are the overall investment opportunities and risks that the PSU segment is seeing. So definitely there is risk. So if you look at some of the PSUs, right? Uh, PSU stocks have many of them have had more than 300 odd or 200 odd% return in the last 1 year, right? Even if you look at on a quarterly basis, you would see stocks like HUDCO, IFCI, MRPL, IRFC, NBCC give north of 80 to 100% return, right? But obviously the last week hasn't been that much rewarding for it from them, right? So if you look at HUDCO, it corrected 1%, but IFCI corrected 12%, NBCC corrected 10%, right? Stock like ITDC corrected 10%, right? And so on. So definitely there has been impact in the short term, but the long term story is a strong one. What we think is that with the re-rating and people are upgrading PSUs, they definitely show a good investment opportunities, and they have a potential for upside because of their low PE ratio. And we think that stocks have a significant growth potential, and given the favorable market condition, we could see these stocks shine as well. But despite a good outlook, you have to be aware about potential risk as well. There are geopolitical uncertainties, market fluctuation, and regulatory changes that could affect the performance of PSUs. And you should have a correct, we should do a thorough risk analysis before we invest into it. And what we think is that definitely PSUs could have allocation right now, but it has to be a balanced approach, well diversified across sectors and industries. So that was pretty much it. My presentation on how the PMS has been doing, and why we are allocating to PSU stocks. Let me also quickly go through this interesting article I wrote yesterday, right, which was on momentum and the how frequently should you be rebalancing the momentum strategy, right? So see, we did this article yesterday where a lot of people have this question that others are rebalancing their momentum strategy once a week, or but why are you doing it once a month, right? So we did this whole analysis, and what we found was, see, rebalancing definitely is important because it controls your risk, it preserves the diversification. One stock could run up, become a majority of your portfolio. With rebalancing, you can bring it down, and it will help you capture gains and losses. But rebalancing frequency is something you have to be extremely careful about, right? Because every time you rebalance, you make these transaction costs, you have these tax consideration, right? You will pay short-term tax, you're selling something, and then the market volatility will also impact, whenever you are rebalancing. So what we did was we took a long-term momentum strategy, which is a very simple momentum strategy. This is not something that we use in our any of our momentum portfolios. Standalone, it's like a simple momentum strategy which is very famous, which is 1 year returns with a 1 month lag. And what we did was we tried and experimented with this strategy across different horizons. 1 month, 6 months, 1 week, weekly rebalancing, monthly rebalancing, quarter rebalancing, yearly, and then we compared it with the Nifty. So if you look at the returns, you would see that it shows you that the monthly rebalancing gives you the highest return, right? And quarterly is close second. And these are all cost adjusted, so they are not pre-cost returns, they are after cost returns, right? So you would see that it makes sense to rebalance on a monthly basis. Even in terms of volatility, monthly has the lowest volatility. But yes, if you are rebalancing on a weekly basis, you could control the risk better and your drawdowns could be a little bit better, right? So it's a very interesting study we did that it does make sense to rebalance on a slightly longer horizon, not do weekly. But yes, you can reduce risk if you're doing weekly rebalancing. And there are other methods that you could explore, which is, let's say, rebalancing based on certain thresholds or based on volatility, etc., which can be incorporated. So this was an interesting piece of research that we also did, and I think we've covered a lot of it. Now, Siddharth, let's go over to some of the questions that we're getting from our audiences, right?
Oh, definitely. Let's switch to the questions. Thank you for the presentation, Sonam. And I think most of the questions you've already answered in the presentation, where a lot of people were asking why PSUs, right? And what is the rationale sort of behind them? What I'll do is, just to keep everything in the interest of time, I will sum up few questions, right? And then you can help us address them. So Mr. Narendran is asking, SEBI would be announcing a scheme which would be in between PMS and mutual funds, right? So would Wright be offering this?
See, we don't know what they're going to offer, right? But but I think there's some speculation going on in the market. We are not exactly clear, so we cannot comment. But definitely, if something that we can work with, then we're very happy to offer that, right?
Surely. Next question is from Mr. Ansh. He's asking, can we switch between the different PMS schemes offered by you?
See, you can, Siddharth, you can talk about this that people can actually create a
Definitely.
split, right?
Yeah, yeah, of course. So there's a combination that can be done, right? So if we have three schemes listed, you can choose a combination that might be customized to your requirements, your needs, and your goals. And the idea is it's very dynamic in nature. So going forward, if you would want to shift also, it can be done. But the only catch is that whenever you would exit a particular scheme with, say, X amount of money and invest in a new one, there would be some transactional cost that would kick in. So, keeping that in mind, yes, we are flexible with that.
Right, right.
Perfect.
So yeah, so we typically we get on a call with clients if they want to switch, right? And
Good.
yeah, so we're happy to do that with anybody who has that thought.
Right. Next question is from Mr. Prashant Sharma. He's one of our esteemed PMS investors as well. His
Yeah.
question is, with the markets at highs and pockets of froth in small, mid, and micro, is it possible to move all SIPs into liquid or debt funds and only deploy on corrections rather than SIPs being used for straight deployment into market when they are done?
Yes, Prashant, definitely we can do that. So we also be are mindful of correction, right? Because see, at the end here, we have the control on how the allocation is happening, right? So even with fresh capital that is coming in, we don't deploy when we see some volatility in the market, and we do like last time the allocation we did at the bottom only, right? After the correction of the fresh capital that came in. So Prashant, definitely we can do that, and make sense. We can have a chat about it, right?
Yes. Perfect. Next question is from Mr. Arvind. He's asking, how will the PMS manage the expected volatility, possible downside risks, and time-wise correction expected in 2024? Do you use hedges to minimize risks?
Yes, yes, we do use hedges, and both in our factor hedge and alpha strategy, we'll be deploying hedges. Even in factor, right? We will check with investors if there is a scenario where hedging makes a lot of sense. We'll be deploying hedge even there, right? Because that will add value, right? So we have a set criteria on when we will hedge. We are mindful of the volatility in the market, the VIX index, about the corrections that we're seeing in the strategy. See, at the end of the day, if you are hedging your particular strategy with a put option, the put option, in a bull market will expire with a slight loss, right? You lose your premium, right? If the market is good, then the put option is going to expire at a loss. So we don't deploy the put option all the time. Only in certain scenarios we do deploy it when we see that there is heightened volatility. If something sharp happens, then this put option could give us a lot of benefits. So that is the strategy, and we see. it as an insurance policy that we'll be deploying if we see that correction. Talking about the scenario, what is happening in the global market, definitely there are fears of recession in the developed world. I think weekly, I think your Japan and UK economies have entered into negative growth territory. Even US is seeing low growth right now, right? The growth has lowered. So definitely
Yes.
it's a scenario where people are a little bit worried, but when the growth goes low, only then will they raise the cut the rates, so which will be a big boost. Money will flow into Indian companies. Like we said, the domestic companies, the PSUs right now are taking charge because of the reform scenario and what's happening in India, right?
Yes, absolutely. Uh, Thank you for answering that very patiently. Now we have a question, very interesting question from Mr. Prasad. He's asking, please explain why I should invest via Right Research when I can get almost or same returns in mutual funds.
See, I think we are doing better than quite a few mutual funds, right? That
Yeah.
is something I think we can fairly say, given our 4 odd years experience on small case and 6 months in PMS. I'm sure we are doing better than quite a few mutual funds. See, the benefit that you get from here is see mutual funds are these highly the regulator the regulation there is much more stricter. What they can only allocate certain percentage to different market caps. They have to maintain certain tracking errors based on different funds. They have to maintain, there are certain key regulations, and those sizes of funds are massive, through which they have liquidity concerns. PMS, or what we are offering right now, is extremely flexible. We can allocate to almost every stock, even though we don't allocate to very very small stocks. And that flexibility adds to the value that we are offering. Even on the churn, right? We can be much more active. So the analysis I showed you, it says monthly churn is better. And but mutual funds, if you typically look at it, they go through a quarterly, 6 monthly cycle. So we think we add incremental value there. It's much more active management that we do. And yeah, I think that would be the answer.
Yes, I think that's perfect. So now we have another question, and I'm just summing this question up. It's from a lot of investors. They are saying that our choice of stock picks are largely based on momentum, right? So how do
Mhm.
we switch when the markets become very, very volatile?
Hmm. Yes. So see, when the markets become very, very volatile, then there's a concept which is called risk targeting, right? What that means is that we want to maintain a certain risk in the market, right? Now, when the markets are good, your high momentum strategies will not have that much risk, right? So they will get big allocation. But when the markets are volatile, during that time, high momentum, or highly, these strategies will have high risk, so they will not get high allocation. They will get lower allocation, safer strategies. So let's look at a very simple analogy here. That, let's say, in a bull market, small caps will get high allocation, but in a bearish market, large caps, which are much more safer, right, we will get higher allocation because they will only fit into the risk budget, right, that we are maintaining. So that is what we do. That we keep our risk low during bearish times, and we do take risk when the markets are good. And that gives you that leads to the switching. Obviously, I will not claim that I can foresee the market changing, and we do that change before the market, uh, when the market corrects, or a day before the market corrects, or immediately after the market corrects, right? We're not saying that we are perfect in terms of timing, but what we are saying is that the philosophy that we follow, it is so well aware about the changing market condition and has all these risk management checks built in, that in the longer term, in a bearish market, it ends up doing much more consistently, and does capital preservation. And in a bullish market, it gives you heightened return because it's targeting the high momentum stocks, right?
Right, right. No, I think that makes a lot of sense. Um, a question from Sonali. She's asking, are the stocks in small case and PMS the same? For example, say something like Alpha Prime in small case and the Alpha Fund that we have on the PMS.
No, not really. They're not exactly the same. There is a little bit of overlap, but the stocks are definitely different, right?
Definitely. So the
Yeah.
core of the strategy relies or is the same, but the stock picking becomes different because the weightage also sort of changes, right?
Yes.
Yes. Perfect. So we have a question from Mr. Rajesh Kumar. He's asking, who is your trading partner? If there is more than one, then both have different login dashboards. Can I take this up, Sonam?
Yeah, yeah, please do, please.
Okay, awesome. So Rajesh ji, we've tied up with a few brokers, to name a few, Edelweiss, Zerodha, MK Global, Philip Capital, and we generally use the broking services for the broker that gives us the most competitive pricing. Because what we've realized is that over a period of time, having the lowest brokerage can make the net returns for our investors look better. However, the login dashboard is provided to us by our custodian, so it is pretty much standard across most of the PMSs that you would see in the country today. Uh, Perfect. So I think Sonam, we've answered most of the questions, right, that everybody had. Would love to get some closing statements from your side.
So definitely, Siddharth, and we are, like I said, we are so happy to have completed 6 months. I think that adds a lot of credibility to what we've been doing. See, of course, we've been doing small case for a long time, but on the PMS, if I meet a fresh investor who doesn't know small case and who knows PMS, they want to look at, your track record, and I think the milestone of 6 months means a lot to us, right, Siddharth? That we
Yeah,
completed 6 months
absolutely.
now. Yeah, and we've done it well. We like we saw in terms of performance, despite volatility and good times, I think our strategies have totally delivered on what they promised. And
Right,
like you said, that we are comfortable with the allocation that we have. We definitely are going to see quite a few things happen this year. There are elections in India, US. There is all the geopolitical concerns that's out there, but
right,
I think that we are in a good allocation right now, and obviously it will keep on evolving as the market changes. We are super excited about the prospect of the PMS, and we will be very excited if anybody sort of wants to
right,
reach out and start with us on this. I think that's pretty
right.
much from my side.
Right. Because there's one last interesting question posted by Mr. Gunny. So I would like you to take that up. And I think it's extremely important for our investors to know. He's asking, do you have a team making the decisions on the stock selection, or is it only you who makes all the decisions?
No, so I don't make all the decisions. There is a system that makes all the decision, right? So everything that we do with Right Research is based on a systematic strategy. So any thought that I might have, like, Siddharth might say that let's try to invest into momentum based on this particular technical signal that I like. I'm looking at MACD on the chart. Why don't we do investment based on MACD, right? So we don't just put it, right? Even I might have a thought like that, but we don't go and just apply that. What we do is we take that particular signal or indicator and we rigorously backtest it historically, right? And when we see that this strategy or this particular indicator that we are looking at has a actual potential to do well in the market, only then we see how it can fit into the strategy, and then we create a system that is following that particular signal along with our other signals, and whatever the system gives out, we allocate based on it, right? So that is
Yes.
that is essentially what a quant strategy or what a systematic strategy does. So if we start, if I have ideas and we start differing from the system, then we have defeated the purpose, right? Because at the end of the day, you want to follow
Right.
along with the system.
Right. No, I think that's awesome. So, sum it up, it is a system driven investment approach that we have, very quantitative and data driven in nature. Just one last question, which I would take up, and then probably we could wrap this up. From Mr. Kishore, he's asking who's the custodian. So, Kishorji, right now, the custodians that we are working with are Edelweiss Novama or even Orbis Financial, right? So, those are the custodians we are working with. Yes, I think we are good to go, Sonam. Yeah.
Yes, and I think somebody is asking about our team
Okay.
as well, right? So let me give
Oh,
you,
sure.
yeah, reveal the team strength and team size. Uh, right now we are on this call, so let us look at the team. See, we have a very interesting team, around 15 odd people, right? And in this team, I typically look at the quant side of thing, and the uh, as a CEO, I look at the team as a whole. Siddharth typically leads, does all the sales calls, and he's leading the operations for the PMS as well. Siddharth Bhaisura is looking at marketing and some of the investment research. We have a team of couple of quants who are working on some very interesting topics, right? And then we have a new CTO, Vinod, who has joined us recently, and we have four developers who work along with the CTO, who are working on different things in the team. And then we have a couple of other folks. I think Lavish, many of you guys might have talked to them on the phone calls. So they do support right now. And yeah, and we are trying to build up our team. I think on the PMS for sure, it's what we realize, it's a very people intensive thing. We have to do follow ups. I think that is something that we really are trying to get much more better at. So we have another team member who's going to join us, who will be working only on PMS operation, making sure that all the onboarding, all the client queries are done as quick as possible, right? And similarly, we are looking to add folks on the sales and business development side as well, right? That is broadly
Mm.
about the team. And what's common across everybody is that people are very passionate about what we are doing, and everybody contributes a lot to the end goal, right?
Perfect. Yes, absolutely. So
Hmm.
this was fantastic. Thank you, everybody, again for joining us on a Sunday morning. The enthusiasm our investors are showing in us, right? It makes us very excited to get up every day and work and to deliver the best, right? So thank you for that, and thank you again, Sonam, for walking us through the outlook, the strategy, and the returns as well. Yes.
Yeah, perfect. So great, everybody. Thanks a lot for joining us on a Sunday. Please enjoy the rest of your day, and I hope you guys have a great week, and the studies have a great week ahead. And we'll connect soon.
Thank you.
Yeah.
Thank you,